What is the best way to use volume profile? For example, the VPOC on the RTY just increased. So when you're looking at the volume profile tells us several very interesting things. Now, let me load up a new chart so I don't mess anything up. And I'm going to use the volume profile. There we go. I don't remember. Does this have to be on a minute time frame, or is it the volumetric candles? Okay, there we go. This is one of the other indicators that NinjaTrader has to offer in their order flow suite. That is the order flow volume profile. Pretty straightforward. But what this is going to show us is several different areas of potential interest. A lot of times, the previous day's VPOC, the volume point of control, which is where the most volume traded, is going to be an area of interest. But along with the VPOC, you also have the VAH, which is the value area high, and the VAL, which is the value area low. So you have two major lines on top and bottom, and then one centrally located between the two. And that's going to be, not between the two, but that's going to be the value area high, low, and the VPOC, right? So just so we can have those value area high, value area low, and VPOC, volume point of control. So what we can use these for are areas of interest. We know that the majority of the interest from the day previous came inside this range. Now, if you were a buyer and you wanted to buy cheap, the best place to buy would be the value area low or lower, right? Anything below that. That's going to be an area of interest, right? Now, if you're aggressive, value area high, that's where the buyers lost a lot of interest because the volume just dropped, right? You can see the volume tank off. So if it starts pulling back to that high, that's where the buyers began gaining interest, right? And if they're aggressive enough, that will be, a potential low. Now, what you can also do is stack these together and say, okay, well, this was the value area from Friday. This was the value area from Thursday. This was the value area from Wednesday. And you'll notice a very common theme here. We're seeing a lot of interest showing up right around here, right? There's a lot of interest showing up right around that zone. Now, along with that, you can stack VPOCs as well, and you can look at it and say, okay, well, we had a volume point of control here, we had a volume point of control here, a volume point of control here, there's another VPOC over here, and you can kind of create your own level of interest. You can sort of gauge an idea of where a lot of traders are showing some interesting movement. Now, I'm going to load this on a 15-minute chart to make it not so intense. But this is where you can really start seeing them, right? So here, if we go backward, right? If we go back to when the market was in congestion, we had a VPOC here. We had a VPOC here. We had a VPOC there. We had a VPOC there. We had a VPOC there. So what do you think is going to happen when the market pulls back to that 2910 to 2905 area on the S&P? There's a hell of a lot of interest there, right? I mean, that's a lot of interest. And you can see that level just acting as support and resistance for a really long time because it's creating this zone of interest. And when the market even came close to it, it pounded away from it, right? So you can stack them up and look for areas of interest. In this case, we broke out. What better place to look for interest than on a pullback to a value area of importance? And if we're looking at a faster time frame, zooming back to yesterday's, especially when you're in a range, we have yesterday's value area high going into Friday, yesterday's value area low going into Friday. You can see the amount of support and resistance that comes into these zones. Sure, it might not be a reversal on the day, but it's definitely an area that I want to pay attention to. And then look at the VPOC, right? I mean, just huge level of support or resistance on each one of these. But I tend to like using them by zooming out a little bit further and looking for where I can find congestion zones and seeing if those congestion zones line up with anything, right? I mean, from high to low, I know that we had a big area of interest right there, right? So if I'm looking at this and I say, okay, from there down to there, that's my zone of interest. Actually, I'm going to draw a box. Let's draw a box. Right there. I'm just going to eyeball it, nothing fancy. But that's going to be our zone of interest. And if I put this on all charts and I get rid of, minimize that, and I look at my bigger time frame and say, okay, you know what? I know we have a big area of interest on the S&P, and I know that it's in between this zone. Do I have anything else that lines up with it? And what we're doing is we're creating a multifaceted level of support, right? So by creating a multifaceted level of support, we're creating an edge, right? If the market can come down into that area, this is the box that we just outlined. Well, we have a full deviation down level of support there. We have a structural level of support a little bit above that. We have rising wedge support coming in there, a more aggressive rising wedge support. So if the market were to back off today, guess what, right? We have a nice level of support right there, or right there at the bottom of it, or maybe a little bit later, right? But that's what you're looking for. You're looking to combine all of these things and create a trading plan ahead of time. That way, when the market comes down to your zone, you already have an actionable area of interest, right? That's why if you look at crude oil has a major level of support right there, right? That's where the major level of support is. We have horizontal support and resistance. We have a 1 deviation move down. We have the previous day's value area low. We have a rising level of channel support. Everything is stacking up in the same place. So you see what we're doing here, right? We're creating that trade plan. We have our battle plan. Now we just have to wait for the market to come to it, right? Also drawing off the lows to the highs, the 50% is smack in the middle of all of that. You're creating an actionable plan. So when the market does come down to there, that's when you're looking to execute. And that's generally what I'm looking for the high probability trades. I want the market to be in a high importance area. I want the edges in probabilities in my favor, and then I can execute, right? Find a TSS entry, find a higher low, higher high, whatever it is, but stack the edge on your favor. And then once that edge is on your favor, you just got to look for an entry. You won't have as many trades. So what, right? Not that big of a deal. I'm not too concerned. You know, that's just part of it. You know, it's the same reason why we took a short on crude oil. Crude oil was building, a reason that we believed that the buyers were failing. They failed above the highs, failed above the highs, failed above the highs, couldn't make a high into a lower high, and broke down. So when it comes back to that, you have a potential shorting opportunity there or on the retest on a TSS short. I chose the TSS short because we have a lower low, but we don't have proof of another lower low to confirm a lower high. So I'm going to use a TSS short to enter into the move to allow me that extra confirmation. It still didn't work, but again, by utilizing that high importance area, we were in and we were able to reduce our risk almost immediately. So to be able to take a crack at a $200, $300 trade, we ended up having to risk $20. You know, I'm okay with those odds all day, every day. That's the importance of stacking those odds in your favor, though, right? Get the edge in your favor. Wait for the market to come to you. Don't chase them. Let the market come to you. You already have your battle plan. You already know what you need to do. Now you just need to execute, right? That's really what we're looking to do. Very simple in the way that it operates, right? Trading isn't simple, but the way that you find those areas are relatively easy. It's not hard, you know, but it's looking at them, waiting, and having the patience to wait for them to come to you, and then executing properly. That's where it gets harder.